Good afternoon, everybody. Thanks for joining us for the JS Mindset Weekly Call. My name's Denny. Today is Saturday, January 16th, 2021. Joining me on the call today are Bill Holter, Jim Sinclair, and Dave. My grandkids are back in school now, and they have been at home since Thanksgiving because of Corona. Watching what these young kids put up with and how disappointed they obviously were that they couldn't be with friends at school was very sad, really, and I said my prayers, but more than that, it just made me mad. After watching a presidential election in November that was a landslide that turned into a stolen election was absolutely shocking to me. And I saw it play the same script again in a couple of senatorial races just a couple of weeks ago. I've been witnessing treason and sedition and fraud, and I asked myself how that could happen. Nobody in Washington seems to give a damn, including the Supreme Court and the Justice Department. But I said my prayers, and more than that, it just made me mad. I watched the riots all summer long, and mayors and governors who literally stood by while people's businesses and lifetimes of property were destroyed. I listened to politicians tell me it was a summer of love, and yet what I was seeing was boiling hatred that was trying to divide us all. I said my prayers for those folks who lost so much, but more than that, I was mad. I've given up on mainstream media, and I get my news from alternative sources that I trust will tell me the truth, and they dig into injustice and fraud and deceit as well as treason. And yet one by one, I can no longer find them in social media because of censorship and a monopoly of proof speech. I said my prayers, but more than that, I am getting mad. I watched the federal government impede and regulate and modulate and stifle free enterprise for years, and yet over the last 4 years, I've begun to see some relief from bureaucracy. Now I'm told that all that progress will be reversed in the coming months. I'm still saying my prayers, but I'm getting madder. I've trusted that there was indeed one rule of law, and now I can clearly see that there are two, one for the commoners and one for the privileged. I see legislation of thousands of pages passed in less than 24 hours after it is published, with no way to digest the ramifications of its contents and its intent. Lord, hear my prayers. I have watched a nation of people with lifetimes of savings and investing being destroyed by a currency that has depreciated so much with no signs of reversing the trend. All the while, there is a hidden force that is holding down gold and silver, the true currency of the world. How can we deal with this? I say my prayers, and I try to control my anger for the suffering that this will most certainly cause. And I've watched the so-called free press squander their privilege by taking sides in matters that would appall a true journalist. I've watched them get away with things like skullduggery and treason and sedition, and for months I've been praying to God to stop this evil and protect this country as the last real stand for freedom. My anger hasn't been working, and I'm praying to God for help for all of us, for which we're about to endure. On Saturdays, I'm blessed to speak with Bill and Jim and Dave, and I get to ask them the questions, not only for their perspective, but to, all these things that are weighing so heavily on all of us. But also I get to hear how their filters are functioning on the daily onslaught of the fruits of evil and fraud. I want to know how they control their anger. They seem to be better at controlling it than I, and I'm grateful for their companionship. Listen, before we get to the questions, be aware that in our conversation today with the boys, it's very important to remember none of us are giving anybody investment advice. What we're trying to do is share our own personal perspectives of the economic world. Now, you can choose to add it to your own perspective, or you can choose to ignore it. In the end, we want you to be prepared for what might certainly be some very trying times. Bill, I'm going to you first because one of the people that I have enjoyed listening to and reading and even going to YouTube was Greg Hunter. A couple of weeks ago, you were on Greg Hunter, and you two took it down, gave Greg his first strike. Bill, I listened to that interview again this morning, and I couldn't find anything egregious that would have initiated that action. Have you got any thoughts about this censorship that you went through?
The only thing I can think of is early on, Greg said pretty much what you just said about the election, that he didn't believe it was fair. He believed it was stolen. And then later on in the interview, I mentioned that everything is a lie. It's so difficult today to get information that is clean information. In other words, you constantly have to check and recheck the sources of information to make sure that it's real. And I talked about markets. All markets are false. I basically came out and said everything's a lie. So, I mean, I feel bad for Greg, but Greg is prepared. If they do take his site down on YouTube, Greg, his own site has everything archived, and he will continue. And I mean, he can go forward without YouTube. So, you know, like I said, I feel bad for him. This was his first strike. My interview was the very first interview that YouTube is taken down on Greg's site. And I do want to mention what I posted on, I think it was Thursday, because that's when it was taken down. What I posted regarding please make copies of interviews. We have our own, our interviews we have recorded. What I'm concerned about is that all the interviews that we've done with other sites, not Greg's site, because Greg has everything archived. I mean, if they take down, you name it, SGT, X22, whatever sites, if they take them down, my fear is that those interviews are gone forever. And like I said on what we posted, is that we have said what we have said, and we stand by what we have said and still believe what we've said. And it would be nice to have that around a year from now, 5 years from now, or even 50 years from now, because we want to be on the record. I mean, we told what we believe to be the truth, and it would be nice to have that at a later date to point to and say, see, you know, this is something that we talked about in real time. So if people can, you know, pick a few interviews, not JS Mindset interviews, but interviews that were done with other sites, if you can copy, not the URL, because if you copy that and then you click on it and it's been taken down, it's taken down. But if you can copy the interviews themselves, that may end up being quite helpful to us.
Jim, I have a question from a listener. I'm going to try to quote it as best I can, but it is clearly for you. What hasn't been addressed in your weekly calls is the impact of a depressed state of economy on the ability of mining companies to just stay in business. It seems to me that in that situation, you would want to own the large producers and not the explorers. Money would not be available to the explorers, and they would probably have to shut down, and share prices would suffer hugely. It'd be nice to have a more in-depth discussion of this topic. What do you think, Jim?
I think that he or she is perceptive, well-read, understands the industry, and understands the problem that the industry faces when money is chasing after companies that deliver groceries in metropolitan areas, and when a car company, when Tesla is more valuable than every other car company in the world added together, there's a question of whether or not, where is money going to come from for the explorer to transition to the producer, to transition to the major. I mean, that's the dream, is it not? And the answer is that money has not been easy to come by. I would say that it's come from people that have been very close to the situation, more in a way, family and friends that have provided the capital for TRX to do what it did. But there hasn't been much capital out there. And then on top of that, the only capital that is out there is toxic. That means that there's some characteristic about it which works against the stockholder and against the company, even though it provides money to the company. And it's my belief that this toxic money is black money, and I mean money coming from an illegal source. I think it's money launderers. So there is no financing for an explorer, and the exploration company's biggest problem only start when they're successful. In other words, if we were to feel sorry for anybody, my experience would tell you if an exploration company hits the jackpot, the first rally is probably going to be the best for a while because of the need for money. This is a cash-intensive business that the listener is trying to analyze. And cash-intensive means that there is no revenue until all of the investment is made. In other words, until you can make gold in a form you can sell gold, where's the revenue coming from? And it costs money to build. Now, it also is a phenomenal business once that build is taken care of, because you get an increase in the price of the gold itself, instantaneously translating geometrically into your revenue flow. Then it's a question of strength of management. Historically, the gold shares have not returned dividend-wise what they should to the shareholders. And, there's a saying that most of the majors are a little bit like the Pirates of the Caribbean, and of that, there's only 10 of them. So gold companies are making money who are producing. There is no question about that. I mean, the basic cost on oxide is $750 or less. So if gold is trading at $1,800 or $1,900, that's quite a profit margin. And if we're correct, and we are, then that profit margin should be sustained and expanded mightily. But to make the transition from an explorer to a producer is rare and hard, arduous, and it takes quite a bit out of anybody who is dedicated to making it happen. So the explorer, the industry of exploration, is under significant pressure to even exist because there is very little investment money in that area where people are making a lot of money for themselves in things which are basically foolish. This is better than the tulip craze. The best example of all of this is Bitcoin, which has so far made something valuable out of nothing whatsoever. And scarcity it can easily be argued, all the points they make about it. There's nothing that isn't hackable, and no program was ever written by a programmer who didn't have a private backdoor to the program. And I do think that applies to everything which is computer based. So the observation that you've made, that the investors made about the difficulty for the explorer to take the next step into production is hard. There's no money coming from the industry itself because the industry is more apt to try and grab the property from the explorer that's unable to finance the property into production. And I might say that where I'm concerned, the timing is wonderful because I'm in production. And that then changes things significantly because it does open up money. There are around the world in different countries a significant appetite for gold. More in the the history of the economics or approach to economics of the European countries are two things. One, the gold is very much a part of it. And number two, God never put gold in the easy place to get to. I mean, it isn't at the corner of Broad and Wall, except if they make it up. It's always extremely cold, extremely hot, terribly unfriendly, or something that makes it not easy to do. So the money that exists now is starting to come in to companies that are going into production and have extremely high reserves and resources. It's primarily from institutional money in areas of investment more friendly to the gold thesis in theory than what we have here. So you're judging what we have here. What I would say is the explorer is more apt to be taken over. So the lucky explorer that has something that's really of good quality will be taken out at a price which is probably good for the investor in that company, but nothing compared to what that entity is worth. So the conclusion you come to is if you are investing in the field, then what you're looking for is a company that is now moving into production, but that has the capacity within the reserves and resources to enter into the field of major production, hundreds of thousands of ounces per year, from the properties already known with further potential. We call that blue sky. But that on what is now known, proved, has the capacity to be in the multi-100,000 ounce category, probably is the sweet spot, because the more mature companies remain very much a product of the colonial times, and not very they prattle about their care for the stakeholders and such, but it's mostly made up. It's not really serious, and in their hearts they don't give a damn. So it's also in that area you'd look for management which has proven by previous activities that it understands the area where it's dealing in, be that Mongolia or Africa or wherever the asset is. So there's your equation of what will be most rewarding. But I'd tell you the exploration business is as close to dead as you can get. And the big companies have never been successful explorers. So that then fits in with what happens to above ground gold. As demand for gold increases, the strange thing about mining a standard is the increase in what you got is more translated into the price of what you have than the abundance. In other words, gold is real scarcity of something which is real. Bitcoin is nothing, or put it this way, a computer something which has been generated out of absolutely nothing, and very appealing to the geeks, which make up a great deal of present investors. But in the long run, if you're looking to protect yourself, a standard of value is the only thing which it will prove itself as a warehouse protecting value. That's what's missing in the crypto coin. And the crypto coin is a large experiment for trying to create a new system in a reset. And reset is a nice word, but truthfully, even those that will administer a reset have no idea in their minds what the first reset will look like. So I compliment the reader. The question is excellent, but the reader or listener has already, in the question, answered the question. Very perceptive, very correct.
David, this week, Andrew Cuomo of New York Lori Lightfoot of Chicago, both came out and said that we need to get the restaurants opened back up as soon as possible. Lightfoot said it was Lightfoot said it was because there were just too many large parties that were spreading the virus, and at least restaurants were good at sanitation practices to prevent that. Dave, my question to you is this. Is it just too late for the restaurant industry, or are they just too far gone now to come back to life, Dave?
Well, Denny, that's a different question depending on where you are, depending on what's taking place with where you are. Again, use Florida as an example. Florida's open, things are going on normally. As I said, here in the resort that I'm at, there's definitely problems. The restaurants are mostly takeout. They've tried to open, a case will pop up, a chef will get it, and they're forced to reclose. But what you have to take into context here is, first off, restaurants historically have a very high failure rate, somewhere, say, 80% in a 10-year period of time. So restaurants, other than the chains, don't usually last forever. Small restaurants get destroyed easier and quicker sometimes than large restaurants, but that may not be the case this time around. But what you have to look at, the bottom line is restaurants provide approximately 11 million jobs in this country. It's 4% of the GDP of the country. People eating out is bigger than all sports combined. It's bigger than all air travel. It's all ground transportation combined. It's huge. I talked about misallocation of capital, whether it was last week or the week before. Money became free. When I was a kid, going out to eat just wasn't happening. My father was a factory worker. It's just, 3 boys and my mother. You couldn't go out to eat, and there really wasn't that many places to go out. I remember the very first McDonald's being built in the state that I lived in. And to make a long story short, we've had such a misallocation of capital that we've pumped it into the eating out industry. And I used to watch this go on, and I still do, and I'm like, what are these people doing? You're dropping 50, 100, 150, 200 at a pop. And I'm saying to myself, as a guy who used to be in the business of selling IRAs, I think I could think of a better way that money could be used. But, hey, have a great time, have a couple cocktails, and have at it if you could afford to do it. Well, the problem becomes is, can you continue to afford to do it? And as Jim has alluded to, we've got companies that have popped up and have billion-dollar market caps delivering food because the same people who are eating out and probably don't have the money to be eating out are now paying somebody else to get it for them. Again, misallocation of capital. I have talked to a friend about this for over 20 years as this is going on. Every time there's a crisis, we have more capital pumped into the system, and it's misallocated each time. If capitalism is allowed to run the way it is supposed to run, you wouldn't have misallocation of capital because you would have failures. And when failures occurred, the capital would be deployed to make a profit. But since right now everything has been distorted, and I say right now, it's been distorted since the 87 market rollover. The feds have figured out how to just keep engineering permanent prosperity out of nothing. And as Jim said, when you talk about Bitcoin, they've invented, not even just with the Bitcoin, Ethereum, Ripple, go down the line. They truly want you to believe that these make-believe computer digits are worth X amount of dollars on any given day, swinging thousands of dollars sometimes a day, and they're going to be a standard bearer for the world going forward. I've got news for you. I don't know where Bitcoin ends up. I don't care where Ethereum ends up. I do know that the same people who run the money system, let's call them the people from the creature from Jekyll Isle, will not allow a competing currency when everything is said and done. They will not allow 57, 27, 12 different cryptocurrencies. I'm going to guess that there will be 1 or 2 major cryptocurrencies, and it won't be any of the ones that we presently have. It will be ones issued by the powers that be. So dining out in a nutshell can only come back is if the misallocation of capital continues. And again, with everybody getting free money, I mean, you know, I just talked to somebody who hasn't worked in over a year, and they were heading out for the day, and they were going 100 miles away to a store, and they were going to stop and maybe make a day of it, have lunch, and they haven't had a job since their restaurant industry of March of last year. So, and I guess they're counting on getting another check out of this. So, wow. Denny, that's going to be the answer. We're going to have to wait and see. My bet is the restaurant industry's got some more tough times to go, and there's going to be a mass amount of failures yet. But we'll see. Let's let it play out.
Hey, Dave. One thing when you were talking about cryptocurrencies. Funny that an article came out today, and this is something we've been saying all along, is that gold and silver, because they are no one's liability, they can never default. They can never go to zero. You can't say that about anything else.
No. Cryptocurrencies, though, I mean, you know, their banks came out last week, one bank, I believe was out of Hong Kong, that says they won't take deposits of cryptocurrency into their, you know, allow them into their banking system. I believe Christine Lagarde was out last week saying, you know, basically this cryptocurrency Bitcoin thing isn't going to fly. I mean, the handwriting's on the wall. Bitcoin is an information operation that's being run on the public. There is absolutely no doubt about it. I have no idea who's behind it. For all I know, the Federal Reserve is behind it. You know, they say there's this made-up guy, whatever his name is, who invented cryptocurrency.
Satoshi, yeah.
Yeah, I believe the CIA creates everything, Bill. You know, I believe that that's why they call it the Central Intelligence Agency. That's why they have all their secret programs that nobody has access to. So at the end of the day, wouldn't it be funny if the CIA is using this for a secret funding project? Who knows? We have no idea nowadays. So, you know, as again, Bitcoin I don't see going up against the world's reserves banks who are going to decide what the new cryptocurrencies are. So we'll see how it turns out. But again, I still every day say to myself, who really is Bitcoin? Is it a government program? I have no idea. And again, I don't believe some guy invented it and it grew into a life of its own. But I don't believe in coincidences, and I don't believe anything happens that is not by design nowadays. We're too advanced a society. Everything is by design. You may not know why, but there's always a why.
There are no coincidences.
Never. Never in my life. So, Denny?
I thought it was a coincidence. I thought it was a coincidence I found you three jaybirds.
Guys like us
can't
avoid guys. Yeah, it is a plan. Guys like us can't avoid guys like us.
Yeah. Bill, you're up next. I tried to stay away from politics, but it's pretty apparent that there were some serious election abnormalities that included some now obvious fraudulent acts in several states. But what effect do you think a lack of confidence in the election process now and in the future will have on the confidence in the currency, the U.S. dollar? Will there be ramifications from this in our confidence of other things within our government?
You're speaking, I think, mostly from a foreigner standpoint. How will foreigners view our currency?
Actually, I was thinking about us as just citizens. How are we going to deal with this when we know there's a skunk in the woodpile?
Well, I think you'll see the average person is going to more and more exit the system. I mean, I think you'll see more and more people, and I'm seeing it in my business. I'm seeing people that would never before have thought of purchasing gold and silver are doing so because they deep down in their gut, they know something is wrong, and they also understand what I just mentioned before is that gold and silver can't go to zero. They're nobody else's liability. They can't default. From a foreigner standpoint, it depends on which country, but I think the average foreigner is going to look at it and say the U.S. is really messed up. And I think, to put it bluntly, the U.S., if they go through with if the inauguration goes through and, you know, there's talk that something's going to happen between now and the inauguration. But if the inauguration goes through, we're going to be viewed as a banana republic. And I say that because we now have everything in place for that. The country's bankrupt. The country has no rule of law, and we just had a sham election.
And we've got barbed wire in the Capitol.
Well, that's another thing, Danny. I'm understanding now that there's 25,000 troops in D.C. To me, that does not add up. I don't understand why there would be 25,000 troops in D.C. Do they really think that, call them Trumpers, for lack of a better term, do they really think they're going to go in and tear up the Capitol? We're already finding out that what happened on the Electoral College Day on January 6th, that was embedded Antifa and BLM people doing that. I mean, we're finding that out after the arrests. Once you find out who the people are, you look at their social media, you look at their background, and you find out who they were. So my point being, it's highly suspect why there's 25,000 troops in the Capitol. Are they really there to prevent conservatives from rioting and destroying the Capitol? I don't think that's the case. I think something else is going on.
Jimmy, you often talk in terms of the Jubilee, biblical terms. And I want to talk to you about another lesson from the Bible when Joseph was sold into slavery by his brothers and he ended up managing the Pharaoh's economy. And they were hit with 7 years of plenty followed by 7 years of lean. Jim, if we were to compare that 14-year period of time to our economy right now, my guess is that, this is Denny Paul's guess, is that we're in the last couple of years of 7 years of plenty. But I've been corrected a couple of times by others that I respect, and I would really like to know if we have a 14-year period of time, 7 good years, 7 bad years, followed one by the other, where would you place the United States economy in that 7 good, 7 bad continuum?
Well, I'd place it right at the doorstep of the change, because we're all of the mind, if we listen to and believe what media says, that all of this is economic stress is a product of a pandemic. And we foreknow absolutely that's not the truth. That underneath this, there's a major monetary failure. And what you saw of it was in the shortest term lending markets that all were going into collapse, and the need for resuscitation by pumping government money just before the pandemic hit. And that hasn't gone away. You see, it could be cured by supplying the money to the short-term lending markets, the shortest-term lending market. But there's another way that could be cured. Stop the demand for the short-term money. And how do you stop the demand for short-term money? You shut down business. So by shutting down business, the banking system was once again propped up by an artificial means. The pandemic was real, but the convenient timing of it leads one to be a bit suspicious if there are no coincidences. It was right on the week of the impending explosion that was taking place in the shortest term lending markets, and all bonds affect all other bonds. So the overnight money affects the notes, it affects the bonds, treasuries, and eventually into the commercial lending market. So we were right on the cusp of another 2008, 2009, and maybe worse. Now, there's a general belief that the economies will recover significantly and quickly the moment we can reopen the everyday normal course of order business. Well, the everyday normal course of business has suffered greatly, and reopening will be a very serious and arduous process. But more so, what we have is we have people who believe in a system after the collapse of the Keynesian economic approach. It was a collapse because the Fed ran out of things to do, things to rename. It became what we said it was many years ago, QE to infinity. Even though at some point in time they said we're tightening, and some point in time said we're playing with the yield curve in some special way that's going to make everything okay, and nothing was okay. And certainly the move towards providing funds into the economy gratuitously is the ultimate quantitative easing, which is the ultimate debt monetization, which must result in the ultimate form of inflation. There is no other way. That is the law, and it is incontrovertible. Yet there are many, if not most, economists today who believe in modern monetary theory, which says that you can build an ebullient economy on debt. Now, of course, there has to be some debt. I mean, that's part of leveraging a business. But you can't build something new on a mountain of something old that isn't working. The mountain of debt out there is not functioning. As Bill said, if you forgive a debt a jubilee, you're actually wiping out the poor guys that lent the money in the first place, while you're benefiting those who owe it because they're not going. They number one, the students can't pay the debt, and the students aren't going to pay the debt. And part of the platform of the present incoming administration is free education, free medicine, free things, without any concept of how the money is going to be developed to pay for these free things, which means that modern monetary theory is the holy grail of today's economists, accepted by the marketplace and considered in the marketplace as a viable new system. And we're anachronisms, dinosaurs, that are just not coming around and understanding that debt is good. Oh, debt is good, properly handled in a modest way, but not the way debt has taken over in the last decade. So I come up with MMTDU, Modern Monetary Theory Duration Unknown. And I want to suggest to you that it doesn't have legs because of the assumption of an immediate return to a state of reasonable economic health the moment that this great new vaccine, which is not a vaccine, by the way, that's not the proper definition of what it is scientifically, cures and prevents the world from the spread of this horrible pandemic given to us by China at exactly the right time. No, business is not coming back that quick. Restaurants are not going to open up immediately. And if they open up, they're going to have 25%, maybe 50% maximum allowed. And that's not exactly the ratio you make money on. If 80% of businesses go broke in the restaurant business, as Dave has told us, then if you could only fill your restaurant 50%, I'd say that 80 would go pretty close to 100. It would become the worst business in the world. So duration unknown, MMTDU, will become duration known when the economy doesn't snap back into significant and meaningful levels of activity and profit. And that's what will break the equity markets. And everything that's being done now, don't for a moment consider that you can put trillions upon trillions of dollars into the economy and nothing happens. The first round, they didn't put it in the economy. They paid the losing side of the derivative, so the winning side of the derivative could collect the money. Remember Goldman Sachs, 365 days in the year, never losing a dollar in their trading department, and now they fired all the traders? That's right, kind of surprising. But the trading department is where the money that came in from the government programs ended up as the profit on the winning side of the derivative, while the losing side of the derivative all were either out of business, acquired by others, or helped to limp along because they were too big to fail. So the key here is, because all pandemics end at some time, they morph. This one's not going to be an easy one to end. And then the next thing is, what is going to be the impact of the enormous clinical test of the entire world getting vaccinated with something just invented in the shortest period of time known to man? That's a very dangerous question. I'm not a doctor. I'm not a scientist. But I'm not going to be vaccinated either. And if the economy doesn't come back right away, guys, quick, I mean really quick, I would expect the equity markets to bust wide open, the dollar to plumb levels nobody expected would happen, and hyperinflation to come roaring out because that money is in the economy. And because I would expect the velocity of money, which looks like it died years ago, to explode on the upside simply by the desire to get rid of the bad currency, would create turnover. So I would say the greatest expectation that you could have from all of the bits and parts of what we're talking about is inflation out of nowhere that MMTDU doesn't expect. And DU would become DK from duration unknown. It would be duration known. That means there is no system. Keynesian economics fails. MMT fails. We get a reset. But what is going to be the form of the reset? And do you honestly believe that the people that got us into this trouble, those that are now preaching MMTDU, have any idea what a reset would look like? And the answer is no, they don't. So eventually, markets will create a reset, and markets will reassert themselves, first as gray markets, but later on within the general system. So this is all coming to an end quite quickly. And it's coming to an end when the recovery doesn't appear.
The old story is never test the depth of the water with both feet unless you know. Yeah, Bill.
Unless you know.
Was that Bill or Dave?
Denny. No, this is Bill. Hang on just 1 second. I want to go back to your original question of 7 years of fat and 7 years of lean.
Yes, sir.
Just from a history standpoint, this whole episode of debt to the moon, I can pretty much tell you, began in the summer of 1982. That was the bottom of the double dip recession. The tax laws were changed in 1985-86 by the Reagan administration, and that tipped financing toward debt. We really, since 1982, they pretty much aborted every single recession that came along that would have cleaned out the bad debt. And that's what recessions are for, is to clean out bad debt and clean out malinvestment or capital that's invested in poor fashion. Because they've not allowed any of the brush fires of recessions to come along every 3 to 5 years, what they've done is they did avoid it in 2008, 2009 by pumping what they pumped into the system. But now you've got the system, the amount of debt outstanding on any metric that you want to look at or any ratio, the amount of debt in the system now, there has never been seen on planet Earth before. And what they've done is they've built a huge pile of timber to be burned up. So we've actually gone 39 years of fat, if you will, and not allowing Mother Nature to clean out debt and clean out the malinvestment. And now what they're going to have is a bonfire, a huge bonfire that takes the entire system down.
And the date is 2032 that we put our attention on. And the 7 years of lean and the 7 years of plenty is not 7 years boom plenty or boom lean. There's transition periods in all economies, including Egypt. So the transition period here is 2019 through 2021, and then 2022 through 2032. That's the lean. And let us hope that we return to some degree of sense or standard currency that in fact does work, that isn't a make-a-believe in cyberspace, with attached to but not convertible into a standard that has been around since the beginning of time and has never failed to function, gold and silver. So we've already examined the period of time, but it's, again, don't look at it as a certain amount of years and then all of a sudden one day you wake up and there's a wonderful economy. Transition into recession, recession into depression, depression into recovery, recovery into times of good.
Well, obviously the 7 years could be 10 years now. That was just the biblical reference, but it was the positioning. And, Jimmy, you think we're right between it, ready to go into some pretty lean times.
I think we called the date and month that it would start,
yeah.
And it has, okay? Yeah. And it was and when it came, Canadian economics collapsed. There was no more tool in the Fed's toolbox, so the Treasury took over the Fed. And now, the box is empty, and if MMT falls on its face, tell me what's left. I haven't heard any alternative to that yet except the, quote, reset. But, the reset is what? They say, well, it's a reset. No. What is the reset?
Yeah, well, that's the question I've got. That's the question I've got for Dave right now is, Dave, remember Jimmy Carter was president and inflation was not only double-digit, we had interest rates in the high teens. I was in the construction business at the time, and I had a lot of builders that did what we called the Tennessee rollover, which they just declared bankruptcy, closed, and went off to Tennessee before they came back to my state. And then they would come back 3 months later and open up under a new name. As everyone is talking about what Jim just said, the reset, I just got to thinking, Dave, isn't a bankruptcy a reset? So then the question is when, not if, the United States declares that it's not going to pay its debt. Dave, would that be our reset confirmed?
Well, it would, but again, structurally I have a hard time seeing us say we're not going to repay our debt. That's like instantly going to make you a world leper. I would again tend to see that we pay our debt back in an inflated currency that will have no value when we give it to you. But I have a hard time with the concept of us throwing our arms up in the air and saying, we're not paying you at all. Possible, but it wouldn't be my first probable choice. I would be looking for something along the line of just massive inflation and the dollar becoming, for lack of a word, worth way less than we know it as it stands right now. And that could go for all paper currencies, not just the dollar, because, again, as Jim has said 1,000 times, maybe 2,000 times, is the U.S. dollar index is nothing but you're weighing one roll of Charmin against another roll of Scott toilet paper, but at the end of the day, you're weighing toilet paper. And as far as the concept of which one's clean and which one's dirty, they all stink. So the purchasing...
Very good.
I'm sorry. I got to laugh at that one, David.
Yeah, you didn't intend that, David. It was wonderful. Maybe you did.
Well, I kind of did intend it, but
I think you did.
All right, continue on, sir. Continue on.
They all stink, and until we get back to a gold-based system, then you can't get rid of that stench. And, it's like we sit here and, I don't want to say argue about Bitcoin. I have no arguments about Bitcoin. If you're trading this, you're making a fortune, and my hat's off to you. But this is like playing hot potato with a live hand grenade. If it goes off when it's in your hands, the game is over forever. As Bill has clearly stated, gold and silver, you're not going to wake up and they're going to go to zero. It can't happen. That's before you get into the mechanics of silver's needed in so many applications nowadays that it's ridiculous. I mean, its industrial application is just huge, and as solar becomes more important, so does silver. So as we take this process through, you have to get down to is how do we get out of this? Well, and I answer it the same way Germany got out of it. Because when the whole world demanded Germany pay, what happened? How many marks do you want? Here's a wheelbarrow full of them. Here's your marks. Well, in a sense, we're already doing that with the dollar. And again, I'll use as the simplest example. I'm into feeding the birds black oil sunflower seed. A 50-pound bag used to be $19.99 at any hardware store where I live. Over the past couple of years, those bags became 40-pound bags, and they were $22.99. Now they've gone to two 20-pound bags you can get, but they're $15.99 a piece. And again, I don't care what product it is you pick right now. Anything and everything. I stopped and picked up a couple of sheets of half-inch plywood. I could not believe how much a 4x8 sheet of plywood was. I picked up a couple 2x12s in 8 feet. They were $25 a piece, and that's not pressure treated. And I was like thinking about when I built my house, how many of these things I went through, and I'm like, holy smokes, what it would cost to reframe a house right now. So it's already happening. And again, by the time we admit it's happening, it's already going to have completely happened. So yes, we're headed for, I would say, inflation, and that's how we're going to settle the debt problem. I don't see Congress standing up and passing a law that says to everybody in the world, you're just burnt, we're not paying you, that's just too bad. But anything's possible nowadays, Danny.
All of this is transition, okay? The MMT ends by transition. It doesn't end in one day. So you're going to see upward pressure on gold. You're going to see these outrageous and foolish new issue mania continue. You're going to see some recovery in business, obviously. I mean, from closed to open has to be infinite. But when they start looking at the figures with a real sharp pencil, they're going to see what are they going to see? The Obama administration economic environment at best, at the absolute best. And then the duration, then the phase of saying that MMT is the way to go, while bankruptcies are continuing to explode, is just it just proves that to be nonsense. Then there's no system, okay, except one that I know of, and that is a standard of value, because there's nothing else that protects value better than the standard, and it's been that way from the beginning of time. And it will continue that way. And the comment on Germany is, do you know that the biggest problem that Weimar had was not just all of a sudden the currency exploded, which it did, but what is compared to our cities and states all went broke. So their cure for that was to say, New York, print your own currency. New Jersey, print your own currency. Cities, Cincinnati, print your own currency. So you can actually find collections of and albums of the strangest looking pieces of paper you ever saw in your life, which were basically city-state currencies. So when they ran out of the ability for anybody to believe that the primary currency, the Reichsmark, had any value, they said, well, yeah, maybe we don't, but how about that wonderful city there? That has some value. Well, our cities and our states are not necessarily, not in good shape. And the bailouts that are going to have to be done, and it will be done under the social order of thinking, or let's say under the platform of the economic platform of the party that is supposed to take control. It's going to bring on a situation where, yeah, those nutty stocks will still be up and high, because the central banks are buying the stocks. That's the only reason. And the central banks will quit when they find out that the system that they put their bet on now has a duration that is so small. Okay? I mean, Keynesian economic theory went on for a relatively significant period of time. But it failed when it ran out of things to do. All that was left was QE. That's a surrender. The idea that shaky, ill-chosen debt, impossible to be repaid, is the brick and mortar and the bones of a very strong building, is simply the belief of lunatics. So my opinion is that very, very soon there's going to be a realization that with the failure of Keynesian economics, central banks failed, period. That will lead to hyperinflation. That will lead to a need for a complete reconstruction in a form that nobody's got in their mind quite yet, except for one word. We're going to have a reset. What is it? I don't know. Okay? Nobody knows.
Jim, I'm sitting here in my library, and I'm looking around because I have a book someplace of John Maynard Keynes, and it was a biography of him, not an autobiography, but he was one heck of a stock trader. When I can't remember whether when his theories were failing or when he was on the outs as far as his theory, the rumor was that he wasn't getting any money anywhere, so he turned to stock trading. And I guess he was one of those genius traders that made a fortune in the market and then went back to politics and this hogwash that he put out that so many people have been following all these years, the beginning of modern monetary theory. But he was supposed to be a great stock trader. That sort of scares me because the whole idea of central bank government as the procurer of last resort ultimately turns back to the stock market, and I got to find that. If I find it, I might mail it to you.
Listen, the rig is central banks buying these leading stocks and seeing things at 3,800, like an auto company and a car manufacturer, or seeing these new deals, which is just absolutely absurd. Okay. You can be a wonderful stock trader as a product of your economic theory. So maybe he just took advantage. He knew from his theory that capital was going to go awash, and whenever it does, the first thing it comes to is equities. He
figured that out.
And
all right, Jim. Since
a bull market is easy.
When the bull's roaring, it's easy.
Yeah.
Go ahead,
Hey,
Dave.
Denny, before you go on to the next question, the one thing on that question that's being missed is there's really no way the U.S. could just say we're not paying, and the reason being dollars are 60 to 65% of monetary reserves.
Yeah.
No, for monetary reserves for the global central banks. So if we stepped up and said, our debt's no good, you're not getting paid on it, it's done, well, we just torpedoed the entire global financial system because every central bank in the world would fold up. Their tent would fold up.
Correct. The tents are all going to say the same thing at the same time.
Bill, I sent
the
you
U.S.
this.
dollar is not alone in failing its debt. Sovereign debt stinks all over.
Billy, I sent you this question early, and I really don't even I can't get the question in my mind exactly, but I'll send it to you like I wrote it to you. You fix it and then try to answer it. Can our economy work without debt? In other words, what would our economy look like without debt? Could there even be an economy without debt? I'm trying to get this in my mind. When we lose all this debt, when this debt evaporates, what happens?
Okay, well, yes, there is a world when all the debt evaporates. Of course, there's a world. There will be barter. There will be trade. The economy will at some point turn around and start going forward again. The best way to ask the question is, what would have happened had we not had all this debt piled into the system? And I think the best way to answer it is, let's look at last year or the year before that, or whatever. Just look at the U.S. accumulated deficit, which on books is $28 trillion. And if you go back to, I think, and I'm not even positive, I think back in the 1960 or thereabouts was the closest we had to a real balanced budget. We had a little bit in 1998 or 99 or whatever for a year, but that was smoke and mirrors. The point being, if that $28 trillion of accumulated debt had not been piled up, that's $28 trillion of stuff, of buildings being built, of you name it. And we're not even talking about private debt now. We're just talking about federal debt. If that debt was not created, the stuff that you look at when you drive through cities or anywhere, bridges, you name it, they wouldn't have been built. So our standard of living would have been negative. Our standard of living for the last 20, 30 years would have been negative. The economy has stagnated to that extent that without the addition of debt, we would have been going in reverse.
You're incredible. Since you're talking, that's all my questions, guys. Have you got anything, Bill? Anything else you want to add?
Yeah, a couple things. I'm going to post a picture of me with racing stripes on my head, and I'll explain it now so that I don't get 100 emails. And when you see the picture, you'll laugh. But I was blazing new trails yesterday or Thursday. Since all the leaves are down, I can see trails now where I ride that just can't be seen in the summertime because of the foliage. So I'm going down this trail, and it just closes up to just this mass of U-pond, which is just thick, gnarly stuff. But I could see through the U-pond, so I leaned down, stuck my head along Principe's neck, and we went through it, and I have racing stripes on my head now. So, and it looks like I got a double lobotomy.
I think it's funny because I can only imagine what Principe was saying. He said, "What's the matter with this man? Doesn't he know where we're going?"
He was saying it in Spanish, by the way. He wasn't saying it.
Yeah, he was, of course. He doesn't know any English.
And by the way, I want everybody listening to know that there was a change at Bill's house. I won't get into it exactly, but I think I know where the racing stripes came from.
One other thing,
Bill.
Denny.
Yes, sir.
We have made the decision that we're going to – JS Mindset is no longer going to have a public side to it. It'll be strictly subscription, and that's just, I guess, a result of what's been going on, site after site getting shut down. So we are going to go fully subscription, and there has been discussion. We're not positive yet, but we're probably going to do a compendium of the last, I guess, what is it now? It's almost 6 years, Jim, huh?
Yeah.
Since 2015. Yeah, so we'll do a compendium that'll include everything posted on both the public side and the subscription side.
Wow.
In case we get shut down or whatever happens, people can have it, and it's on the record.
Historians will be looking at that for years.
Yeah, it could be in an electronic book if you wanted to, and pretty hard to get rid of that. But yeah, it's time to speak amongst our listeners, who I think are our friends, it's not time to go out and try and straighten anything out, because it's not going to straighten out. It's going to take its course now. And
well, it was very gracious of you.
Time.
It was gracious of you, Jimmy, to set it up that way to try to help people, but that's over now.
It is, because something has happened, and we have to face it, and we see the difficulties some people are getting into. And, we can't, we will have no platform to speak on if we speak too loudly.
Well, Jim, have you got anything else you want to share?
No, I just want to...
No mother-in-law stories.
No, I'm being... see, we just found out why... when you see the picture, remember what you just heard. I'm sorry. Well, that's the way they get the truth. It just blurts out. A duration of to recover is the key factor in whether or not modern monetary theory can be considered the new religion. It is today. Can it be considered the new religion? Duration of recovery. I think that, to me, that's the most important. Does the recovery happen? How big is it? How meaningful is it? Does it even last?
David, before we go to you, I want to tell you a story. My wife and I were having a discussion, and I swear to goodness that she sounded just like you. And you'll never convince me. I've been saying this for years, and I thought, my God, I'm married to Dave. Man, she was making great arguments and everything, and I just tucked my tail and said, okay. So, David, with that, the floor is yours. Have you got anything else you want to share?
No, I don't, Kenny. Again, we're at a very fluid situation, and I don't mean that from a politics standpoint. I mean from a world standpoint of what's going on with both the world's currencies as well as the world's markets. The reality on the ground doesn't match what our equity markets are doing around the world. We know there's been massive misallocation of capital. We know that, stocks are worth numbers that are just absolutely, they're just ridiculous. We have businesses going public that probably will never turn a profit and being valued in billions and billions of dollars. And, people have to really pay attention at this stage of the game to what will hold value if and when a reset that everybody's talking about fully gets kicked in. And, again, I have my feelings that precious metals are the only thing that's going to save you. When I say save you, it's not going to save you, but it's going to give you spending power and going to at least keep your lifestyle something that's going to be able to be afforded. So I think massive hyperinflation is the next stage of this game. We're just going to devalue the dollar. I've said that all along. That is the answer to print. I would expect it to ramp up. And, again, the metals are the metals. When they're ready to move in price, they will move in price. And I think that's coming soon.
David, all I remember of our conversation is squeezing Charmin.
Go ahead, David. Oh, I'm sorry, Bill.
No, what I was going to say is owning gold and silver, they, like Dave said, they won't save you, but owning gold and silver will give you options to make decisions, life decisions that you need to make. Without the gold and silver, you wouldn't have the options.
I will say this. It's okay to talk to your friends about gold and silver, just like it's okay to talk to your friends about religion. If you get too far out, then you're getting into some danger territory. But if you're talking to your friends, you can talk to them about it. And I can't tell you how many people have reached out to me this week with questions that in my friendships with them over many, many years, we've never broached it, and we're broaching it now. So it's amazing to me, Bill. It's amazing. Well, folks, that's everything. Thanks for listening. As Bill said, we are going to a full paywall site. We still hope you'll join us. With that being said, always remember that money isn't everything. It's just that having money makes things so much easier in life. Truly, it is the people in our lives that are worth $1 million. and we can't forget to tell them so. With that, we'll let you go, and we'll see you in a week.